afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, is our regular Monday guest. And welcome to the show, Vishnu.
Good to be here, Brian. Thanks for having me on. No better way to start a Monday.
Yeah, Vishnu, before I get your insights, let's first take a look at how crypto markets are performing, and then we'll take a look at how regional stock markets are performing. Bitcoin is at 23,390. It's down 1.73%. Ethereum is at 1,694.58. It's down 0.47%. Now, looking across to regional equity markets, the Straits Times Index, where you're at, is up 0.89%. KLSC is up 0.32%. Shanghai is up 0.21%. The ASX All Ordinaries is up 0.55%. The Nikkei is up 0.6%. The Hang Seng is up 0.08%. And rounding up the numbers, we've got the Kospi, which is up 0.12%. Vishnu, it's been quite a while since we've had a sea of green across the region. Tell us why.
It does look like we had a carry through momentum from the FOMC. So right after FOMC, markets, despite the 75 basis point hike, markets interpreted two things in their favor, which is they think they framed it as the Fed, getting really ready to step down on the pace of tightening. One of it was a lack of forward guidance. So for Jay Powell, the Fed chair, he stopped short of saying what will happen, but he said sometime in the distant future you will get, or sometime in the future they are looking at stepping down the pace of hikes. If we think about it, this is no different to what they earlier indicated, where most of the hikes are done upfront and later you get to decelerate. Nevertheless, markets took this as a half full version of less brutal Fed tightening. That's one of it. The other aspect of it that markets garnered some perhaps follow through momentum from is the fact that you also had US GDP going into a technical recession. So second quarter of contraction. This is where it gets perverse. So they're not celebrating the recession risks. Rather, it appears the markets are rejoicing the fact that this probably emphasizes their bets that the Fed may pull back faster on the rate hike. So the slowdown in the economy may be outpaced by the Fed pulling back, perhaps even reversing in 2023 some of the tightening they've done. And equity markets like that news, which is why we have seen Nasdaq outperforming. We've seen equities generally higher, dollar being sold off on a less aggressive Fed, which has coincided with long end yields falling on recession risks, as well as the fact that this has been a sense that if the Fed steps back, then risk assets have got some room to rally. So those are the major sentiments that markets are trading on. But we think that there ought to be caution around the fringes because the Fed's communique hasn't changed materially. But for this week, there could be those Goldilocks softness. Any soft data that isn't an outright collapse, but instead just a softening, may be read as positive insofar as it reinforces the view that you get a more supportive Fed where risk markets are concerned.
Okay, so carrying on that narrative in terms of softer data, we had softer data out of China over the weekend. So the Purchasing Managers Index for July came in at 49, down from 50.2 in June, and much lower than expected of the 50.4. Then today we had the PMI index out of China, which stood at 50.4 compared to the 51.5 predicted by a Reuters poll. So basically playing into that narrative again, softer data out of China. What's your take on this and how the market will react?
But it does look like it's a mixed bag on this one because we've got the difference between a slight deceleration in the services aspect of PMIs and the manufacturing aspect, which is the one that you pointed to, went into outright contraction 49. So there are a few ways we can look at this. One of it, obviously, is the fact that, given a very, very weak first half growth in China and a very bad start to the second half, it doesn't bode well. But markets are not taken aback. They've been discounting China's growth prospects for a while now. And the latest Politburo also this time around strategically left out the around 5.5% growth target. So this is conspicuous by absence, which means they're looking for reasonable growth, one that doesn't inflame pre-existing financial risks, whether it's leverage or anything else, but at the same time supports the economy. So those who are looking for support can find it where they want it. The cynics though will point to existing weaknesses in Chinese data, and again, this is really for markets to play the hand whichever way they want. One may interpret this as more reason for other global economies to step in and say, look, there may be recession risks. Let's pull back on the tightening, especially if extra Chinese demand is not going to, or the absence of extra Chinese demand, to some extent, it quells the fears of commodity prices being elevated due to Chinese demand. So this is just for anyone to cut it out any way they want it. But from a more stoic point of view, or in a more grounded point of view, downturn risks and the fact that the Fed may still be watching inflation, because one of the key things about their technical recession is that the drop in Q2 was driven by higher prices, higher GDP price index. So the Fed is keeping its eye on the inflation ball. They may not pull back as quickly, whereas the economy can slow a lot faster. And that particular window would spell more risk off. So our caution here is that at this point, whatever relief rallies are coming through, they're still susceptible to downside risks, which we don't want to discount.
Okay, and then looking ahead this week, what are some key data and events that we should be looking out for that could move markets?
I mean, we'll get the usual turn of the month activity data. So in the US, you'll get your ISM manufacturing, your ISM data. You will also get the equivalent of that from Europe, from elsewhere. We are turning our focus this week more towards Asia and how Asia deals with the incoming data. So I'll give you three particular ones that we're watching. We're watching the RBA. The RBA, we think, will do another 50 basis point hike. For a while, the whispers were they could step this up to 75, but we think they're going to stick to a 50 to just cement their inflation anchoring without upsetting the economy too much. Similarly, Reserve Bank of India will also be hiking. Markets are expecting them to step back from 50 to say 35 basis points. We take a more hawkish view. We think they will continue with the 50. So rupee volatility, Aussie volatility are two things that we need to watch out for, and that extends to their asset markets. Indonesia's Q2 GDP is coming out. Here, this is where I think, again, we are going to be subject to some degree of perversion, because a slightly softer print may be taken as validation of Bank Indonesia's refrain in terms of tightening rates, whereas a very strong print can be turned on its head to say, look, Bank Indonesia may start hiking rates, so the domestic economy may not function very well, or may take a little bit of a dip. One way or the other, the Indonesian rupiah may be under pressure for two reasons. One is the underreaction of Bank Indonesia to inflation risks, and the other being overall recession risks growing with data suggests that commodity prices may soften a little bit more at the margin. And from the terms of trade effect, this is not going to be very good for commodity currencies, despite the softer dollar.
Now, Vishnu, as always, thank you very much for your insights, and thanks for coming on the show.
My pleasure always, Brian. Thank you.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our various platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.